Hey y'all, welcome back to Ebony Told You. If you're new here, make sure you go ahead and subscribe and hit that bell notification so you'll know every time that I post. Also, go ahead and like and comment down below if you love this video. And if you are not new here, welcome back. And if you've been watching and you ain't new here, go ahead and hit that subscribe button. Because, why you watching and you not subscribed? I don't understand. All right, I do have a few announcements that I need to make. All right, I have shut down 91 Degreez for the time being. I have a few other things that I'm going to be giving more attention to. So 91 Degreez is temporarily closed for the time being. I will announce when it reopens, and I just do not know when. But for the time being, I have closed shop for a little while. And also I am a brand ambassador for Novel Bath and Botanicals. So you have probably seen it in previous videos that I've had. You will be seeing it in upcoming videos. I use these products on a daily basis. They're part of my daily routine. So you will be seeing very much more of Novel Bath and Botanicals here on Ebony Told You. And y'all, check out this new intro though. Alright y'all, let's get at the subject at hand. By the title of this video, you should probably already know what I'm going to be talking about. I have had several clients to close using FHA financing, and we're going to get into the bare detail of what FHA financing is. I have a few notes here so to keep me on task and, make sure I'm saying everything that I would like to say to you all. So, class is in session, y'all. Get you a pen and a notebook or a piece of paper or something, because I got some very good information to give to you all. So the first session, we are going to talk about what is an FHA loan. Like, what is it? It is guaranteed by the Federal Housing Administration, and that is an agency of the Department of Housing and Urban Development, also known as HUD. And also the FHA has insured 47 million mortgages since its inception, since 1934. So, y'all, they've been doing this since 1934. They know exactly what they are doing. All right. And also, it requires a 3.5% down payment. So, for easy math, say for instance, you have a $100,000 house under contract. You would be required to put a $3,500 down payment for that home. FHA Loan Types. There are 4 different loan types with FHA. You may have heard of these a time or two before, but I'm going to briefly talk about these. Okay, the first one is fixed rate. This is the most common. You can get a 15 or a 30-year term. You have that same interest rate the entirety of the term of your loan. The government fully backs the loan, but mortgage lenders that are authorized to fund FHA loans set their own interest rates. All right. The second one is adjustable rate mortgage, which is also known with the acronym ARM. This one, interest rates vary over time. You can have 3, 5, or 7 years in which the initial rate is fixed. After that time lapses, the rate can rise or decrease, and it all depends on what the current interest rate is at that particular time. All right, the third one is FHA Energy Efficient Mortgage, which is also known as EEM. It encourages homeowners to make energy efficient upgrades on their properties. This can be used to cover costs for acceptable energy-related improvements on an existing home or a new home that you are purchasing. Other FHA types. Less used types is the 203K. This is generally used for people who are buying homes that need fixing up, or what we call fixer-uppers. Loan type allows you to roll the cost of your repair and renovation expenses into your mortgage based on the expected higher value of the property after those improvements are made. So, there are 4 different types of FHA loans. We talked about fixed rate, adjustable rate mortgage, FHA energy efficient mortgage, and 203K FHA mortgage. Next section, FHA loan eligibility. How can you know that if you are eligible to get an FHA mortgage or not? Eligibility depends on your credit score, income, debts, home price, and the size of your down payment, and other various factors. Yes, you can do more than a 3.5%. General requirements is you need a valid social security number, a lawful U.S. resident, 3.5% down payment, and you intend on using the property as your primary residence. Credit requirements, at least a 580. What I did find out in my research is credit scores below a 580 may be able to qualify for a 10% down payment, meaning, easy math again. If I have a $100,000 house, I would need to put down $10,000. That's if you have the money and your credit score is not where it needs to be, and also if that mortgage company even allows that. FHA lenders can have credit score minimums that exceed what the government requires. So, for example, XYZ mortgage lending may require you to have a 600 credit score versus a 580. If you have filed for bankruptcy, you will have need to be at least 2 years removed from filing and have established good credit. Also, if you have experienced a foreclosure, you must be 3 years removed from the foreclosure. Guidelines and different policies vary by the lender. So find out what mortgage lender you are interested in using. Find out what their policies and guidelines are. FHA debt and loan requirements. Lenders will look at the relationship between your gross monthly income and your major monthly debts when evaluating your loan file. Basically, what it is a debt to income. What you make per month and what your major debts that are being reported to your credit, what they are. And it has to, depending on the mortgage lender, it has to be within a certain percentage range. So that varies by mortgage lenders as well. And some lenders may have lower thresholds than others, and borrowers with more challenging loan files can encounter more restrictive DTI guidelines. And again, DTI is debt to income ratio. And do not have restrictions on how much borrowers can make. So you can make as much money as you like, but your debt to income has to be within a certain range depending upon the lender. FHA loan property requirements. It sets requirements for what type of properties can be financed within FHA financing. Your lender will order an appraisal of the property. The appraiser will evaluate the condition of each area and room of the property, including any attics or basements, all mechanical systems, appliances, plumbing, foundation, roof, gutters. They'll be specifically looking for signs of damage, deferred maintenance, or deterioration. Normal wear and tear will be noted. As long as the property appears well maintained, it will qualify for FHA financing. The main goals of an FHA appraisal is to ensure that the home is healthy, safe, and structurally sound building to live in, and make sure the actual value of the home exceeds or matches the purchase price. Section 4. FHA Loan Benefits. Low credit score requirement, low down payment, because with other types of loans, like conventional, you can be required to pay as much as 5% to 20% down. So FHA has a low down payment requirement. And also FHA allows you to use qualified gift funds toward your down payment or closing costs. You will have to talk to your lender about their policies and required documentation regarding the gift funds. And also, many home types are eligible as far as single family homes, condo units, duplexes, manufactured housing, and mobile homes. It is very popular with first-time home buyers. And like I said, the low down payment requirements and more lenient credit standards. FHA loan rates. There is no set interest rate. Interest rates vary all of the time. Rates can vary depending on the lender, the loan type, your credit score, and much more. Fixed interest rates tend to be slightly lower than those on conventional mortgage programs. Section 6, FHA loans and mortgage insurance. In order to allow for low down payments and credit scores, the FHA does require you to pay a mortgage insurance premium to protect the lender in case you default on your loan. You will pay this fee at closing and then again month after month along with your mortgage payment. The cost is 1.75 of your total home loan balance, regardless of your credit score or debt to income ratio. Your annual MIP will be calculated every year and built into your monthly mortgage payments. The total of these payments will depend on your loan to value ratio, your loan balance, and your loan's term. Section 7, FHA loan limits. Vary by location and property type. It amounts to 115% of your county's median home price. They fluctuate every year as your local market changes. And you can find your FHA loan limit by using the tool at HUD.gov. And FHA lenders can offer jumbo loans, which is loans in excess of the FHA limit in your area. They may have tighter guidelines for minimum credit score, credit history, DTI, and much more. Section 8, FHA loan closing costs. Closing costs tend to equal 2 to 5% of your total loan amount. Closing costs have origination fee, the survey fee, the appraisal fee, the underwriting fee. As the buyer, you are responsible for the closing costs, and you can ask the seller to contribute to a portion of them. It's not always guaranteed, and right now in the seller market, it is highly unlikely. If a seller contributes anything towards your closing costs, it is called concession. Sellers can contribute up to 6% of the home's total sales price towards your closing costs. Sellers cannot contribute toward your down payment requirement. Section 9, FHA loan refinancing. You already have a home loan, you can opt to use an FHA mortgage when refinancing your existing loan. You might do this if mortgage rates fall below your current loan's rate or if the fixed period of your adjustable rate is ending. FHA streamlined financing. This is if you already have an FHA loan and you want to refinance it to a new one. The qualifications for that: you must have made 6 payments on your current loan, and your closing date must have been at least 210 days past. If you would like to do conventional to FHA, so this means you already have a conventional loan and you want to refinance to an FHA loan, you can have very big benefit. You can refinance up to 96.5% of your current home value. Also, they have what is called the net tangible benefit. The refinance improves your financial position in the following ways. The principal loan balance and interest is reduced by at least 5%. The adjustable rate is 2% lower than your current fixed rate. The new fixed rate is less than 2% higher than your current adjustable rate. And also, the term of the loan has been reduced. Cash out finance. If you owned your home for a little while, you may need some, new repairs or money for college tuition to pay off some debt, or you just need some extra money, you can qualify to refinance up to 85% of your home's value. Section 10, how to apply for FHA loan. So the first step is find a lender that is approved for FHA. Then you talk to your loan officer that you have been speaking with on about getting pre-approved. They should send you an application and let you know what necessary documents you need to get started. Find a realtor. These first 3 steps you can kind of mix up. You can find a realtor, and most realtors have their set go-to of lenders that they work with. So you can either find your lender first. I say either find your lender first or find your realtor first. Then you want to find your property and sign a purchase agreement with the seller. And then you'll finalize your loan application with your lender. You'll await your appraisal. The lender will order the appraisal and of the property and make sure it meets the FHA standards. And you wait for your loan as it's underwritten and processed by the lender. You attend your closing, sign your papers, bring your closing costs, and get your keys. And then you move into your new home. Are looking to purchase or sell your existing home in the upstate of South Carolina? I am your girl. My contact information is listed down below. Thank you for watching, and I will see you guys in my next video. Bye.